War is a tragedy that extends far beyond the battlefields. It leaves scars not just on the land but on the very fabric of society. While the immediate impact on human life is undeniable, the ripple effects are far-reaching and often overlooked. The economic shockwaves can be equally devastating, affecting nations and individuals alike. From soaring inflation to collapsing markets and widespread job losses, the financial fallout of war touches every corner of society. The economic instability can lead to a domino effect, where one sector's collapse triggers a chain reaction across various industries. For individuals and families, war creates immense economic uncertainty. The fear of losing one's job or home becomes a daily reality. Savings can evaporate overnight, investments can plummet in value, and livelihoods can vanish as businesses struggle to survive. The psychological toll of this financial instability can be overwhelming. Understanding the economic consequences of war is not about being alarmist, it's about being prepared. Knowledge is power, and being informed can make a significant difference. This essay will delve into the profound ways in which war upends economies and threatens personal finances. We will explore the unseen costs that extend beyond the battlefield. By examining historical examples and exploring practical strategies, we can equip ourselves to navigate these turbulent times with greater resilience. Understanding past conflicts can offer valuable lessons for the future. War unleashes a perfect storm of economic disruption, affecting every layer of society. The very act of war demands a massive shift in resources, diverting them from productive civilian use to destructive military purposes. Governments redirect spending toward military production and deployment, often at the expense of social programs and infrastructure development. This redirection of resources often leads to shortages of essential goods and services, causing prices to skyrocket and making everyday life more difficult for ordinary citizens. Furthermore, war disrupts global trade networks as borders close, supply chains crumble, and businesses grapple with uncertainty. International trade, which many economies rely on, becomes a complex and risky endeavor. This can lead to widespread unemployment, business closures, and a significant decline in overall economic output, pushing many into poverty. The financial markets, acutely sensitive to instability, often react with panic, sending stock prices tumbling and eroding investor confidence. This financial turmoil can have long-lasting effects on economic stability. The economic fallout of war doesn't discriminate. It impacts individuals, families, businesses, and entire nations, creating a ripple effect that can last for generations. Understanding these consequences is the first step toward mitigating their impact on our lives. By recognizing the far-reaching effects of war, we can better prepare and respond to these challenges, fostering resilience and recovery in the face of adversity. History provides stark lessons about the economic devastation caused by war. World War I, for instance, shattered the global economic order that had existed for decades. European nations, burdened by war debts and ravaged by fighting, faced economic depression and social unrest. World War II, while ultimately leading to a period of economic growth, initially brought about widespread shortages, rationing, and economic hardship. The war's aftermath saw the rise of new economic superpowers, forever altering the global balance of power. These historical examples underscore the profound and lasting impact of war on economies worldwide. They serve as a stark reminder that war is not just a political or military event, it is an economic earthquake that reshapes the world. The economic burden of war extends far beyond the immediate costs of military campaigns. The Vietnam War, for instance, while geographically distant from the United States, had a significant impact on its economy. The war contributed to rising inflation and budget deficits, casting a long shadow over the American economy. Similarly, the Gulf War, while relatively short-lived, triggered economic shocks that reverberated globally. Oil prices surged, disrupting industries and impacting consumers worldwide. These examples highlight the interconnectedness of the global economy and the far-reaching consequences of even localized conflicts. Understanding these ripple effects is crucial for individuals seeking to protect their financial well-being in an increasingly volatile world. One of the most immediate and insidious consequences of war is inflation. As governments ramp up military spending and resources are diverted toward the war effort, shortages of essential goods and services can occur. This, coupled with increased demand, drives up prices, eroding the purchasing power of your hard-earned money. Imagine going to the grocery store only to find that the price of bread has doubled, or filling up your car with gasoline that now costs twice as much. This is the harsh reality of inflation, and it hits those with limited incomes and savings the hardest. Protecting yourself from inflation requires a proactive approach to managing your finances, which we will explore in the upcoming sections. The stock market, a barometer of economic confidence, often reacts dramatically to geopolitical events like war. The uncertainty and fear surrounding war can trigger panic selling, sending stock prices plummeting. Investors, fearing further losses, may pull their money out of the market, exacerbating the downturn. For those with investments, war can lead to significant losses, especially if they are heavily invested in companies directly impacted by the conflict. It's essential to remember that the stock market is driven by sentiment as much as it is by fundamentals. During times of war, maintaining a long-term perspective and avoiding impulsive investment decisions is crucial. War can devastate job markets, as businesses struggle with supply chain disruptions, reduced consumer spending, and overall economic uncertainty. Layoffs and hiring freezes become commonplace. Industries reliant on international trade, or those deemed non-essential to the war effort, often bear the brunt of these job losses. Imagine losing your job because the factory you work at can no longer import the raw materials it needs due to a naval blockade. Or consider the plight of a restaurant owner forced to close because people are afraid to dine out amidst wartime anxieties. The economic consequences of war are not abstract. They have real-world impacts on people's ability to provide for themselves and their families. While war undeniably creates economic challenges, there are steps you can take to protect your financial well-being during these turbulent times. The key lies in being prepared, informed, and proactive in managing your finances. Remember, the goal is not to profit from war, but to preserve your financial stability and weather the storm. By adopting a long-term perspective and focusing on sound financial principles, you can navigate the economic uncertainties of war with greater resilience. Diversification is a fundamental principle of investing, and it becomes even more critical during times of war. Diversifying your investments means spreading your risk across different asset classes, such as stocks, bonds, real estate, and commodities. This approach helps safeguard your portfolio from the volatile swings of any single market. During war, certain sectors like defense or energy may benefit, while others like travel or luxury goods may suffer. By diversifying, you reduce the impact of losses in one area by potential gains in another, creating a more resilient portfolio. Managing your debt effectively is crucial during times of economic uncertainty. High levels of debt can quickly become unsustainable if you face a job loss or a reduction in income due to war's impact on the economy. Prioritize paying down high-interest debt, such as credit cards, to reduce your financial burden. If possible, create an emergency fund to cover essential expenses for several months. Having a financial cushion can provide peace of mind and help you weather unexpected financial storms. Commodities such as gold, silver, and oil are often seen as safe haven assets during times of geopolitical instability, including war. When the world is in turmoil, these assets provide a sense of security. These tangible assets tend to hold their value or even appreciate when traditional investments like stocks and bonds decline. This is because they are not directly tied to the performance of any one economy or company. Investing in commodities can act as a hedge against inflation, which is a significant concern during uncertain times. As the cost of goods and services increases, the prices of commodities often rise as well, providing a buffer against the eroding value of money. However, it's essential to remember that commodity markets can be volatile, especially during periods of conflict and uncertainty. Therefore, it's crucial to invest wisely and within your risk tolerance. Keeping a close eye on market trends and being prepared to adjust your strategy is key. Remember, managing your finances during times of war is about preservation and resilience. It's not just about making profits, but also about safeguarding your assets. By taking a proactive approach, diversifying your investments, managing your debt, and considering safe haven assets, you can create a more robust financial strategy. You can navigate these challenging times with greater confidence and protect your financial well-being. Building a diversified portfolio that includes commodities can help you weather the storm and emerge stronger. The economic consequences of war are real, but they don't have to control your future. By taking proactive measures and educating yourself, you can navigate these turbulent times and build a brighter financial future. Remember, the most powerful weapon against uncertainty is knowledge. Like this video, subscribe for more financial advice, and leave a comment below sharing your own tips for protecting your finances in uncertain times. Your financial future is in your hands. Take control today.